Good morning, everybody. Hope the week is treating you extremely well. In this week's video, we're going to take a look at the four major U.S. indexes. We'll take a look at that Nasdaq McClellan Summation Index, as a key level has been breached on that. And we're also going to take a look at a couple of data points that have subsequently gotten what I feel is extreme readings. And we will certainly jump into that and talk about what that could mean here over the next couple of weeks, month or so. So let's jump right into it here. First and foremost, let's talk about the S&P 500. We had that strong breakout here to the upside a couple months ago. We have continued to grind higher. If we look at this, the market is above its 10, 20, 50, rising 200-day moving averages. All of those things are lined up bullish. And if we jump in here and we pay attention, this week we had a nice gap up. We subsequently have traded sideways, so essentially we are digesting that information, so to speak, and it's been very, very strong. There hasn't been any sort of dip subsequently this week, and the moving averages continue to catch up with price, so we could see a continuation here to the upside. When we take a look at all of the indexes, they all look very strong. The Nasdaq, same kind of setup. Remember that first target that we were talking about was at 8680 level from the breakout back here in October. We're closing in on that, but if you look at all the information that we put on the chart the last time we spoke, we talked about the MACD looking like it was going to cross over and continue to head higher, histogram flipping positive. All of those things have subsequently played out, and price has continued to rise. Dow Jones acted extremely well. We talked about the importance of breaking over that 28,000 level. It's broken over it this week and held on to it. All of the moving averages are pointed the correct direction as well. And last but not least, when we jump in and we take a look at the Russell, which we have talked about as being the weakest of the major U.S. indexes, it still has not made a new all-time high since all the way back in the middle of last year. We've paid very close attention to that 1620 level all year. It did break above that. That is some bullish action that we have seen, and it's continued to grind higher. Next real resistance level in on that chart's about that 1720 zone, so we're going to pay close attention to see exactly how that subsequently plays out here over the next couple of weeks. If we were to breach that level and head back towards those all-time highs, and we finally had the real participation from the mid and small caps here in this market, that would be a very good signal moving into next year. Now, I want to talk about the Nasdaq McClellan Summation Index and that key level that we've breached. We have talked about this in a number of videos, and we really were focusing in on that tight range that had been made in between that 2 and that 300 level. Well, we subsequently have made that breakout, and that is extremely bullish. And this level was very important going all the way back to last year as well. So we moved right up into that essentially resistance zone, based for 2 months, and then finally made the breakout higher. That is some good action there in on the breadth reading. Really, our next resistance point comes in at that 500 level, but this is some strong tailwinds for the market here into the end of the year. Now, with all that bullish information out of the way, let's jump in and take a look at some of the negative components here. One of the things I really like to pay attention to is sentiment extremes, right? When readings get very, very stretched, typically that means we kind of have some sort of a rubber band effect that happens and things kind of fall back more into line. And one of the things that we take a look is that dumb money, smart money confidence spread. And every time we get really, really stretched, all right, everything gets really, really stretched, the market tends to make a little bit of a pullback, and we subsequently, that dumb money, smart money spread kind of neutralizes itself once again. It works in both directions as well. So if it's very stretched the opposite direction, right, the market will subsequently make a rise versus a fall. And so we can see every time that we've had those big spreads, we have had the market essentially make a move because of that. And once again, everything kind of falls back in line at one point in time. Now, where we're at right now is very spread. Once again, right, we're actually widening that spread between the dumb money and the smart money as we head into the end of the year. That's a bit concerning when we see a reading this high and that low from the dumb money, and subsequently low from the smart money. That typically tends to mean that we have some sort of event where the market essentially will make that cross back over or come back towards that even zone. And so again, this doesn't mean that the bull market is over. We're going to have a super large correction or anything like that. A couple of percent pullback could alleviate this reading, and that would not be a surprise at all. So this is one of those things when we look at that's a cause for caution moving forward. And the next piece of information we're going to look at from Sentiment Trader also is a little bit of a cautionary tale as well. Let's Rydex mutual funds, the traders inside of it have really almost never been more bullish than they're currently at right now. And we can go back and look at it. They're almost 100% reading here. So it is in the top 4% of readings in the last 25 years. Now, when we get readings that are this extreme, it's usually not great for the short term or the mid-term. Over the long term, it doesn't actually have a negative effect. And when we take a look at the actual data points here, what we can see is, again, short-term, mid-term, it's a bit of a concern with the positive, readings there, falling to only 25% of the time, 38% of the time, and then when we get 6 months out, 1 year out, again, positive skew to that data set. And these type of readings make sense when we take a look at the numbers where we get pullbacks. And again, the pullbacks aren't necessarily massive, 3-4%, 5% in that type of range, but when we talk about sentiment, when one side of the market gets way too aggressive or loaded on one side of the market, what ends up happening is there's not a lot of people left to continue that trend. So if everybody is bullish, at some point in time, there's not going to be anybody else to make those purchases because everybody essentially is all in. And what happens is then some people start taking profits, a little bit of weakness shows up. Some of the people that got in late on the trend subsequently now find themselves underwater, they sell, and that type of cycle happens. And then if it's a strong move, right, if everybody was right, they're just happened too many people at one point in time, right, over the next couple of months after the market makes a subsequent pullback, those buyers step back in and the market continues to head higher. So when we look at a reading like this, again, when we look out 6 months, a year later, it's not necessarily a negative thing. But in the short term, if everybody is loaded on one side of the ship, that boat tends to rock towards that side. And so when we look at all the data points, there is reason to be cautious. But again, if we're just looking at things from a technical analysis standpoint and not paying attention to anything else, right, we don't have a whole lot to worry about when we've got all of our moving averages lined up correctly. We've continued to glide higher. All the stuff on the daily chart subsequently does look pretty bullish. So just keep in mind as we head into the end of the year, there are reasons to be cautious. And that is just something that we'll continue to take a look at. I hope you guys have yourselves a fantastic week. As always, if you guys have any questions, or if there's anything that you'd like to reach out and talk to me about, feel free to give me a call, 814-580-9881, or you can email me at mtedeschi at Perspective Wealth Planning. Hope you guys have yourselves a fantastic week.